Welcome back to the channel, Crypto Trend Trader, with a quick update on S&P traditional markets. But before we get started, I want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so here I have the weekly chart, and right now the real question is, everybody's wondering, is this it? Is the bottom in? Are we getting ready to bounce? And the answer is yes, we are going to bounce, and temporary bottom is in, but we're going to get rejected, and the selling is going to continue. And I say that very definitively, and here's why. Because the truth is that everyone, as an investor, as a trader, anybody knows that the absolute fundamental, most important, number one thing is protecting your principal and then growing your capital. But it's so much more important to protect your account from losses than actual gains are, because it's so much harder to get back a loss than it is to just get a gain, essentially. It's hard to word that, but I'm going to do like a quick little example here. But real quick, I just did want to kind of show this off. And here is on the weekly chart. What I would expect to happen is we basically got that sell-off down here, got picked up by the 89 moving average, and now we bounced up to the 55. And what we're going to try to do is we're going to try to get up here and prevent this negative cross between the red and the yellow moving averages. And if we can't prevent that cross on the weekly, we're going to get continuation to the downside. And you'll see the exact same thing happen here. It's very common in all markets. You'll essentially sell off eventually down to that 89, get the bounce back up, and attempt to stop the cross between the red and the yellow moving average, or shorter time frame moving averages. And then once that confirms across here, you'll see the rejection bounce back down, off in a second rejection like this. Put in another lower high, and then again you'll sell back off and finally get down to the 200 exponential, or in this case traditional markets tend to respect the traditional moving averages more, which is why I have the exponential and the SMAs as well, simple moving averages. So you'll see like the faded green here, that's the 55 simple, as where the green here is the exponential, and then same here, that's the 200 exponential is the bright blue, and the 200 simple is the darker blue. And these indicators are all available for free on TradingView, so you can check them out. We have the TJD Prophecy, TJD Jewel Thief, and TJD TD MACD. They are all proprietary and excellent indicators available for free. So I do encourage you to check those out. So, but after that, we have entered a long-term downtrend on the parabolic SAR. And I would expect us to come down here at some point in time to that 26.75 range. And this is why I say so definitively, though, that I really do believe that the selling is going to continue, because I'm going to basically illustrate just like a simple example for you, okay? So basically we're going to start off with $100, okay? So you have $100 in your account. And now we're going to demonstrate, essentially, what happens when you make a gain and when you make a loss. Okay, so let's say here we take that $100 and we make a good investment with it. Okay, and we make a 25% gain. Okay, so we're gonna take our $100, we make a 25% gain, and now here we are. We have $125. Pretty simple, right? Obviously, that's very simple. All right. So now let's take that same $100 and we made a bad investment or a bad trade, and now we lost 25% of our account. So now we only have $75 left. Okay? So the same percentage change in both cases affect our principal. Okay? So now we took the 100, we made 25% gains, we have 125. Now we took the 100, we lost 25%, we have 75. Okay? So now let's reverse it. Let's say we change our strategy, or maybe that was just bad luck last time, and this time we're going to make a good trade, okay? So this guy now, he's going to make a 25% trade, a good trade for 25%, okay? So he makes 25%. So now he has his 75, and then 25 of 75 is what, 37? It's like 18 and a half. So 18 and a half on top of 75. So what is that, $93 now? So now our guy's back up to 93. Awesome. Good job. Good job. And now this guy's 125. And now look, he's going to mess up now. He did not learn from his mistake. Or he got cocky, let's say. All right. And then, you know, he just lost 25% of his account. So now let's see where's he going to be at here. All right. So now he had his 125 minus 25% is going to be, what's that, about 25 and 6 1/4, 31 1/4. So 25, 6. So he's down at, he's about $94, roughly $94. So you should very clearly get the point that I just made right here. If you're just looking at this and you're seeing both of our traders made one good trade for 25% up and one bad trade for 25% down. And yet both traders have less than their initial starting capital. So this guy made the 25% up trade, went to 125, and then lost 25% of his 125. So he started trading with more. So when he took the loss, it was more of the account, but equal percentage. So it takes him down below the 100 starting. And this guy had the 100 starting, failed to protect his capital, took the 25% loss, went down to 75. So now when he makes that same 25% gain, it's not going to recoup him back up to that stage. And now if you essentially exponentially compound those losses, it makes it so much harder to ever get back to your initial principal once you take a loss. Because if those were like big losses, if you had the $100 and then you took a 50% loss on that $100, you're down to $50 now instead of 75. So now in order to get back to that 100, your $50, you have to make 100% profit. So your $50 needs to double 100% profit to get back to where you started because you lost 50%. So think about that. Think about how difficult that is. So in say for instance you invested in some not so good altcoin and you bought it at, let's say, $1,000. Let's say like Ethereum. Not to hate on Ethereum or anything, but let's say you bought the hype and you got in at $1,000. So you bought your $1,000 Ethereum, and then it went down not to $80. Let's just round off the number and say it went down to $100. So it went down 90%. You lost 90% of your value. So now in order for that $100 Ethereum to ever get back to $1,000, it needs to 10x, which means you need 1,000% gains. You need a 10x. You need 1,000% gains to get back to where you started because you lost 90%. So 90% loss is equal to, basically a 10x opposite, or 1,000% gain. So just keep that in mind. And that's why, honestly, I'm confident that we're going to see continued selling in the traditional markets, in the stock market. Because all these bounces, people are going to use it as an opportunity to, essentially get liquidity, to liquidate some of their positions just in case it goes lower, to protect their principal, protect their capital. Because it's more important to protect these large hedge funds and, large investments and, $1 million, trillion, whatever you want to say, all these huge amounts of money. It's more important to them to protect it than it is to grow it at this point in time. And when you start seeing volatility like this and potential, the risk reward goes through the roof. It is extremely risky right now in these markets as opposed to the potential reward to the upside. And essentially, if you're thinking long term on this, you're better off sitting on the sidelines. For these hedge funds and fund managers and everything are going to sit on the sidelines for a year or 3 years or 5 years or whatever it takes before they ever just before they just sit in the market and just get scalped, 10 or 20%, on a potential massive correction. So, and we're not even seeing like the initial supply chain disruption and everything. I'm not going to get into all this in this video, but, like I said, there's a certain percentage of money out there, of smart money, of big money, that's going to determine that they're better off on the sidelines until this all flushes out, and they're going to wait for the volatility to settle. And what that's going to mean is that liquidity is going to be a factor, and every one of these bounces is going to get sold into at key Fibonacci levels and key moving average levels. So that's it, crypto trend trader on the traditional markets, and I'm out of here.